Hey there guys, my name is Marquez, and in this video I'm going to compare SCHD with SPHD. Now I'm someone who loves investing into ETFs, but more than investing I love analyzing it. And also in this video I'm going to show you the comparison between expense ratio, then holdings, how much they are overlapping, then past performance, and also what are some dividends they are paying out. Now these ETFs are good. I like personally more SCHD. I don't really like SPHD, to be honest, and the reason is that yes, I just don't like the companies they got in SPHD, but this is like my perspective on it. Let's look on the performance. Maybe you will like it. For me, it's really a risky ETF with the high expense ratio, and I will show you in a minute. Yeah, but I told you already so much, so let's go to the video. And if you want to learn how you can make money with ETFs, I created a course. You will find the course down below in the description. So let's start. Now here we are, SCHD and SPHD. Different issuer right here, and then expense ratio. Expense ratio, SCHD is only 0.06, but with SPHD it's 0.30, and that's damn, that's huge. Now, what does it mean is, let's say that you would invest $10,000, you would pay $30 fee for SPHD, and SCHD $6. Assets under management in this regard, also SCHD is winning, 30 billion to 2.97 billion, and then we see the average daily volume 20 million comparing to 133 million. Underlying index is also different, SP500 low volatility high dividend index, and dividend 100 index for SCHD. Number of holdings, half of it for SPHD. And when we scroll down below, and I'm going to show you soon enough the performance, and then holdings. So when you look on holdings, you see financials, technology, consumer, non-cyclicals, industrials, healthcare, like the main thing. And then SPHD, you see consumer, non-cyclicals, utilities, financials. Utilities is huge here. Technology is only 7%, healthcare 9%, and financials 14 comparing to 21. Technology 7 to 21. And then you see the companies here. Like when you look on the companies, like damn, what are these companies, right? There is like wonderful comment about SPHD is that those companies, like they're saying that SPHD companies are like not undervalued, but maybe the price isn't the right because of various reasons. But I would really like just to invest to VTI, VIG, VOO, SPY, or even triple leveraged ETFs like TQQQ or QQQM, or even QQQ, which is comparing to NASDAQ 100 companies. And yeah, I don't know about the SPHD, but I don't have like some kind of vendetta against it. But it's like my 2 cents on it. SCHD, on the other hand, Broadcom, Home Depot, Pfizer, BlackRock, PepsiCo, Coca-Cola Company. When we look on a fund overlap, we see SCHD, SPHD. 18% of 100 holdings are also in SPHD. 36% of SPHD. 50 holdings are also in SCHD. Now we can clearly see that the overlap is 22%. And when we look on what kind of companies that are overlapping, Ultra Group, Verizon, Pfizer, Broadcom, Coca-Cola, Prudential Financial. So you see they are also overlapping, but only by 22%. And let's see the backtest here. So let's say that we are going to start investing in 2010 with initial amount $10,000 and contributed fixed amount $200 monthly. And we are going to reinvest the dividends into the ETF SCHD comparing to SPHD. Now, when we look at this, analyze portfolios. So what we can find is that with SCHD, you would make by $30,000 more. And you can clearly see that, damn, final balance 80 to 57. So SCHD was overperforming it. Now, when you look on how well it was performing, you can clearly see that, okay, 2013 was SCHD, 2014 SPHD, 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 SCHD, then SCHD, SCHD, huge, and SCHD again. Now, when you look on not only this, and you can clearly see the performance of both, you can look on the dividends. That yes, you could say that, okay, we got a high dividend, but look at the numbers. Okay, my camera just went again off. I will just turn it off. Look at the numbers here. You see that yes, it was a little bit higher, but you need to also look on like performance of the whole ETFs, not just the dividends paid. And then you need to compare it to the risk of the ETF. You need to contribute it with, or like manage it and calculate it with the ETF expense ratio. And you can clearly see that expense ratio with SPHD and what kind of stocks they got, I don't think that's worth it to invest to. Like, tell me different. Tell me in what way I'm wrong. Like, when you just look on the basic numbers, I could easily just do the deeper research for this. When you look on the performance, when you look on what kind of stocks they have, when the technology is, in my opinion, the future, but maybe you love those companies. And when you look on how much you would get paid with dividends, I don't know. Yes, the dividends are better with SPHD. I completely agree. I completely agree. But when you look at this from this perspective, it's like, what? You know? So to summarize this whole video, what we learned. We learned that expense ratio is higher with SPHD, lower assets under management and lower average daily volume. They got 50 holdings comparing to expense ratio of 0.06. That means that if you would invest $10,000, you would pay $30 fee in SPHD, but only $6 with SCHD. Then 50 holdings comparing to 100 holdings. Now, when you look here on financials, technology, consumer non-cyclicals, utilities, and then you see the companies here, the holdings, Williams, Iron Mountain, Broadcom, Home Depot, PPL Corporation, Chevron Corporation. And the rating quality score is better with SCHD. Now, what we can do is that I'm going to compare the dividend yield history here. So SPHD right here, comparing to SCHD, is that yes, it was overperforming. But when you look on the growth of the market and what kind of companies they got, I just don't know. I don't think this is the right choice, but that's your money, what you want to invest to. And yeah. So, but also the one thing that is like a negative side of SCHD is that you're getting no exposure to small mid-cap companies. Large hard growth companies. And you will miss out the growth part of the market with SCHD. But again, your money, your choice. Thank you very much guys for watching and have a great day and goodbye. See ya.